Howdy there, folks, and welcome into today's video. First off, hope you guys are doing great as always out there. We gotta talk about Alibaba stock here today. There is a new situation here with Alibaba, and the story just kind of is getting worse and worse when it comes to Alibaba and what is going on fundamentally with the destruction of this company, essentially. And I want to show you guys exactly what's going on here. It's not being talked about very much. Let's be honest. The stock has been downtrending for the past year or so. A lot of big tech and just, companies in general have been going up a lot, right? And so folks are looking at this, especially from a value perspective, right? And they're looking at growth rates. They're looking at PEs, and they're saying, holy smokes, this ain't no jokers. You got to be flipping my flapjacks. This stock looks like a deal steal, right? Anybody that knows anything about valuing companies, there's no way you could make a case that this is not a great stock to buy on a valuation basis, okay? That is very key. If you run, if you look at PEs, if you look at price sales ratios, anything, if you compare it to its, American tech giants, right? Compared to this Chinese tech giant, there's no question the numbers line up for this one, okay? And this is where people are having an issue because they're seeing the numbers and like, man, this looks like a deal steal. They're looking at the stock charts, it's been downtrending, the numbers look amazing, but they're forgetting about the elephants in the room. And there's a new elephant that just emerged here that is scarier than ever before.
The real reason Alibaba's shares tanked 10% even after issuing dividend first time ever. Why do companies give out dividend to their shareholders? Is it because they have too much cash? They don't know how to invest it back into their business or build trust with their shareholder base and attract cash flow investors. Alibaba has approved $2.5 billion of annual dividend giving out to their shareholders for the first time ever because, in my opinion, they want to gain trust from U.S. shareholders due to the fact when you buy Baba shares, you don't actually own the business, but now you're getting a one-time dividend from the business. So I am pleased to hear this. I think that Alibaba knows how to invest its excess cash. They want to drive up their ROIC to double digits returns. They just have too much net cash on hand. Over 62 billion US dollars with no debt. So what's the real reason for the big drop in share prices? I will explain it all right after this.
How you like that? How you like that? Nah. Look at you, now look at me. Look at you.
Welcome back to the Audacious Money Witch channel, where we talk about macroeconomy, stocks, bonds, and commodity markets. If you like any of these topics, you are intelligent. That's why you're here. And you know what to do, and push my button if you like what you see in today's video. Because you're already a success. It is done when you join the Audacious Money Witch Club. This video is brought to you by my website. If you're a good boy, go to audaciousmoneywitch.square.site to add more meaning into your life. If you play your cards right and completely submit like my good boys do, then I will take you under my wing. Author of best-selling books, Goddess Cheryl. My good boys always get rewarded handsomely. You are such a good boy. You like hearing that, don't you? You want to get into the bookstore, you want it to be real, you want it to be true, you want to join the Audacious Money Witch Club, don't you?
Mr. President, after today, would you still refer to President Xi as a dictator? This is a term that you used earlier this year.
Well, look, he is. I mean, he's a dictator in the sense that he is a guy who runs a country that is a communist country that is based on a form of government totally different than ours. Anyway.
这种说法极其错误，是不负责任的政治操弄，中方坚决反对。需要指出的是，总有一些别有用心的人企图挑拨、破坏中美关系，这也不会得逞。
An escalating fight between the US and China for technological dominance has triggered one of the most stunning reversals of corporate strategy yet. On Thursday, Alibaba Group Holding walked back plans to spin off and list its $11 billion cloud business. Chairman Joseph Tsai and Chief Executive Officer Eddie Wu, two of Alibaba, founder Jack Ma's longest-standing lieutenants, said China's e-commerce and internet computing leader needed a strategy reset. Wu explained in his first public remarks since taking the helm that US's ever-increasing restrictions on chip sales to China has forced the company to rethink its plan to break up the empire Ma spent decades amassing into 6 parts. Alibaba also confirmed it was suspending a listing for the popular grocery business Freshippo. Wall Street's response to Alibaba's reversal on Thursday was swift. Shares slid as much as 10% in New York trading to $78.23, the biggest drop in more than a year. The Biden administration's curbs on exports of certain chips, specifically designed for artificial intelligence use and critical for the data centers and high-end computing operations that drive Alibaba's cloud services, aren't helping. Circumstances have changed. Tsai told analysts on a post-earnings call. Circumstances have changed. Tsai told analysts on a post-earnings call the company must now focus on providing cash to make investments, because in the AI-driven world, to develop a full-blown business based on a varied network and high-scaled infrastructure, it requires investment. The Biden administration's efforts to prevent the Chinese government from obtaining cutting-edge chips for military applications have begun affecting the country's private sector in unexpected ways. Analysts said other factors might have played into Alibaba's reversal. Its cloud business has been slowing and losing market shares and has attracted government scrutiny over alleged security violations. The best time for Alibaba to have sought a public listing for its cloud division has already passed, said Li, head of the Beijing-based technology think tank. The strength of the business itself is an issue. Even before Thursday's announcement, Alibaba's endeavor had faced headwinds. Its potential Hong Kong IPO, a Freshippo, was on the back burner amid weak sentiment for consumer stocks. Former Chief Executive Officer Daniel Zhang quit just months after agreeing to lead its cloud division. Logistics arm Cainiao filed for Hong Kong IPO in late September, but the valuation it will command remains unclear. I was quite taken aback, said Kevin Nett, head of Asian equities. My initial thoughts are that the whole corporate restructuring announced in May could be at risk. The cloud spinoff was seen as one of the marquee corporate actions that would work to reduce the discount of the holding company. Asamu Yamagata said, the planned restructuring bolstered Alibaba's share price, he said, so I would expect a reversal. The cloud spinoff was one part of the most radical corporate overhaul in Alibaba history, one that was designed to spread more autonomy throughout its various businesses, rejuvenate them, and create more market value. Such a split, however, also threatened to reduce Alibaba's heft and erode its position as one of the leaders of the Chinese digital economy. Many observers saw the split up as potentially encouraged by a government that at the time was seeking to break up powerful private sector interests and curb the growing influence of tech firms. Instead of a split up, Alibaba executives said the company will focus on growing the cloud unit organically and issuing its first ever annual dividend totaling $2.5 billion, a bid to assuage shareholders who are hoping for a big payout from the unit's debut. The market is scratching its head The first annual dividend looks like compensation to shareholders. However, it may not fully offset the shock given the higher value of Cloud Unit. Alibaba announced its decisions along with solid but unspectacular quarterly earnings. It posted a 9% rise in sales to $30.8 billion, barely exceeding average projections. With Zhang's exit, Cai and Wu now face the challenge of reviving the cloud arm and revitalizing the company as a whole. As Alibaba Cloud revenue only grow 2% year over year. One of the biggest bets is AI. The company has released its own large language model, Tanji Quanwen, and is also investing in high-flying startups like Zipu AI and Beishuan. Tai said last month the Cloud Unit now hosts half of Chinese generative AI firms and serves about 80% of the country's technology companies. It's unclear how the US sanctions will affect that effort. The cloud division is at the heart of Alibaba's AI initiatives and requires the sort of powerful chips that Santa Clara, California-based NVIDIA Corp supplies, ones that are now mostly barred from Chinese firms. Cloud business aside, Alibaba is grappling with a tepid consumer economy. Why Estee Lauder 3% slide, Tesla shares dropped around 4%, along with 9% Baba share drops. It's obviously because of China. Biden met with Chinese President Xi Jinping and touted success. There was no real success story because nothing significant will change. After the meeting, Biden blew whatever goodwill stemmed from the meeting by calling Xi a dictator. Look, he's a dictator in the sense that he's a guy who runs a country that is a communist country that's based on a form of government totally different than ours, Biden said. In response, China's foreign ministry said it strongly opposes the remarks without mentioning Biden by name. This statement is extremely wrong and irresponsible political manipulation. Foreign Ministry spokesperson Mao Ning told reporters on Thursday at a routine briefing. With that, whatever goodwill there was over the carefully planned summit vanished. On top of that, China vows to be unstoppable in conquering Taiwan. Chinese spokesperson said U.S. side should take real actions to honor its commitment of not supporting Taiwan independence. Stop arming Taiwan and support China's peaceful reunification. China will realize reunification, and this is unstoppable. This means they will take Taiwan someday, and US is not going to stop them. That's why not only Baba stock plunged, Tesla and Estee Lauder stock dropped too. The last reason is because of the deflation force, like oil prices dropped and recession is spreading from China to the US. You are such a good boy for watching my video right till the end. Bye.